But I'll tell you what, is like I don't use a ton of margin. I don't want to get carried away. I already have a lot of money. I already have a lot of money. Let me say it this way, Mike. You know, if I made $30 million only $20 million in this recession, I don't want to risk blowing my account up and going to zero when I'm making a decision like, hey, am I going to make, 30 million or 20 million? It's like it's better for me to be a little conservative and make 22 million instead of trying to go for 30 knowing that zero is an outcome.
Yeah.
Hi, my name is Garrett. I'm currently on Derek's Moneyberg mentoring program, and we're not even halfway through, and I already feel that I have a lot more clarity in who I am, what I want, what my goals are, how to structure my day better. If there's one thing I did get, it's that we could all use our 168 hours in our week a lot more wisely. With all this stuff, I definitely feel a lot more confident in myself. I'm less emotional about my wins and losses and more focused on, just being objective about what I need to, focus on moving forward. If I were to give one piece of advice to anybody watching this that wants to, create real wealth, build a business, and optimize their time a lot more better, it would be to apply today for Derek's Moneyberg mentoring program. Yeah, go apply today. It's probably the greatest investment I've made thus far in life.
The platform don't matter that much.
It's not that important.
They're pretty damn competitive. If they're not really competitive, you can't be one of the top 5 or even top 10 platforms.
Yeah.
So, in no particular order, you could use Ameritrade, you could use E-Trade or Charles Schwab or Fidelity or Interactive Brokers or there's Robinhood for that matter. There's the platforms are competitive enough that it depends what you want to do. That some are better than others slightly. Depends what you want to do, but the truth is any of them are adequate.
Yeah. And
after you get used to the platform, you're just like, you stick with that one because it does this, that. It does more shit than it's more complicated than you have time to figure out. Okay.
It's like. That I understand why you asked that question, right? And
sure. It's a smart question.
Yeah, and he should be in. The thing is, it's like asking Michelangelo, what kind of brush you use, or it's like asking Michael Jordan, hey, what kind of socks were you using when you won that championship, right? Because that's not the thing. Yep. You know what I'm saying? That's not the thing that's going to get you there, right? And if you had Michelangelo's brush, all the same equipment, it doesn't mean you're going to be able to perform at his level, right?
No, it's a smart question that, because if you don't know, that might be a big thing.
Yeah.
So it's smart that you asked that question. I would certainly not make fun of anybody that asked me that question, but I very much agree with Brandon is like, Michelangelo could paint with a fucking dog's tail and still make shit look good,
Yeah, or better than what I could do with the best equipment,
Yeah, Michael Jordan could have played with no shoes at all and still outperform anybody, more or less.
For sure.
So, it's again, smart question, but it's the most important thing is the education because, no matter what account you got, if you don't know what to do with it, if you don't understand the risks involved, if you don't understand how to optimize the upside and minimize the downside, because every fool thinks that it's just all upside. No, it's not all upside. You can lose your ass.
Yeah.
You can lose your ass. So you gotta be careful. Be careful. Be careful. If you don't know what you're doing, you probably go bankrupt. If you don't know what you're doing, you could be in a negative net worth situation.
Yeah.
So be careful. But the platform, they're all good enough. The education is where you got to be focused.
At this point, it'd be difficult to find a bad platform.
No, all the top ones are adequate.
Yeah.
All the top ones are adequate. Eric G says, can you fundamentally and technically analyze crypto? How do you determine its intrinsic value to deem it a valuable investment? I have a whole week that I spend about crypto. There's an entire week that we cover that in the course. And obviously I can go a whole lot deeper there because we'll spend maybe 20 hours about that topic, all right? But in a couple bullet points here is that, no, your instinct is right, Eric, that you don't have that same fundamental ability or technical ability to analyze that the way that you could a stock because they're non-regulated. These cryptocurrencies are not regulated. There's a tremendous amount of fraud. There's a tremendous amount of schemes of pump and dump schemes and various market manipulations. It's an unregulated market.
Yeah.
It's an unregulated market. It's extremely scary. Now, any publicly traded company, they have to follow GAAP accounting. If If it's a U.S. company, they have to follow generally accepted accounting principles. They're audited. You have audited financials. You have plenty of oversight that they if they participated in some of the nonsense these cryptos did, they'd all go to prison. So nobody would ever do that in a publicly traded company. Would never ever do the things that happen in crypto. So no, there's tremendous risk that is beyond your control. And if I look at a company, when I made the Nordstrom pick, okay, when I bought Nordstrom at $12, and my last purchase was $12.15, and then it went up to fucking $37.
Yeah.
When I made that decision, I could go to the store. I went to 15 Nordstroms all around the damn country. I'd go talk to the store clerks. I'd go talk to at least 2 store clerks at every one that I visit. I'd go back to the same ones a month later. I'd ask them again, hey, how are things going? Oh, I see your inventory looks better. You have your better inventory levels on the floor. Is that because your supply chain's back in good order, or is that because you're not selling shit, so there's just a lot of inventory sitting? And they're like, no, sales are going good. And then I understood that normally they have their biggest sale of the year at the end of the second quarter.
Yeah, Q4.
And instead this year it got shifted to Q3. So then their second quarter returns looked like shit. But what the people didn't know, who didn't know the company, is that, they shifted the main sale to Q3, so of course Q2 looked like shit. But Q3 looked fantastic. And then in early November when they announced Q3, and I had bought a bunch of this, I had quite a large position, and the stock has tripled. It's more than tripled since then. But again, I could look at their financial statements. I knew their leverage. I knew the history of the company. I knew their online sales versus their in-store sales. I know that it used to be 33% of their sales were online, but now it's 54%. I could go talk to the store clerks and look in their eyes and look at their body language while I speak with them and ask them what's going on. I could go to a different city and do it again. I could go to a different city and do it again. So there's all the financial statements, plus the interpersonal things, plus there's so many things that you can know about a company that I felt extremely confident betting a large amount of money that Nordstrom's going to do good. And by the way, I haven't sold my Nordstrom. I think it's still going to do good. I'm not recommending you buy it, because if you don't know the things that I know about it, you'll probably lose money. So I don't recommend that you buy it without good coaching. But you can't do that with cryptocurrencies, man.
Yeah.
You can't do that. So you're putting yourself in jeopardy for sure.
Yeah, and you need to be able to understand the risk, You need to understand the risk you're taking and how it fits into your entire portfolio, right? And that's what you're going to teach in the program. Is like, if you're gonna decide to get into the crypto market, what percentage of your portfolio should you allocate? How much risk, and you don't want to just jump into it and be like, yo, Bitcoin's up, let me buy it, right? Because crypto is wildly volatile. One of the reasons it's so volatile is because its market capitalization is pretty small in comparison to maybe say a lot of the big name stocks, right? It's like that means so a little bit of money put in or taken out can move the stock wildly in comparison to what that same amount of money would do to Apple, right? It wouldn't move the stock in the same amount because Apple's market cap is so much higher, right? So it's still in the early stages, it's still the Wild West, and you want to be careful. That's one of the reasons why the program's going to help you out so much, because it'll help you analyze your level of risk that you're willing to take. Because to be clear, it is a riskier play. You saw it drop on Monday. It dropped 20% in one day. Apple, for example, is never going to do that. You know what I'm saying? I mean, I don't want to say never, but it's I don't know.
Much less likely.
Yeah, much less likely.
Much less implied volatility.
Right, but there's a lot of crypto is volatile, so that's why you have to be so much more pragmatic and careful when you're in it. Does that make sense? I hope that.
No, it's well said. No, it's well said. Be careful. Be careful. It's a currency. It's a currency. It trades against the euro and the pound and the yen and the every other fucking currency in the world. The dollar and the everything. So. I'll teach you how to understand foreign exchange trading and cryptocurrency trading, and more importantly, investment, long-term investment in these things, and more importantly, long-term investment. Timothy says, "It's a good question, Timothy." Tim says, "What is your quote-unquote gas pedal, aka what got you started, kicked off your momentum, the changes you made in your life to initiate your dedication and motivation?" And I got a few thoughts about that. Timothy is. I grew up poor, and I refuse to stay that way. That emotional leverage is one of the most valuable things that I ever got. I really, I had such bad role models and such nasty people around me in my childhood that, it really took me 30 years to get away from these people. And I'm never going back. I'm a balderholic. I don't use drugs. Maybe, I got 2 addictions. I eat potatoes a little bit too much.
Okay.
That's why I'm overweight. I eat a little too much potatoes. And my other addiction is I'm a ballerholic. I'm allergic to poverty. I got to be a baller. I'm allergic to poverty.
Yeah,
it makes me sick.
I have adverse reactions as well.
It makes me sick.
Yeah.
The idea makes me a little nauseous. I think it's a choice, man. So there's a little humor there, but I think it's a choice. Your financial outcome is, it's just a choice, I chose to do better. I chose to learn more and work harder, to be away from, pigeons, man. I was born around a bunch of low-life pigeons, the lower end of pigeons. I was born around the lower end of the pigeon spectrum, but I chose to not stay there, man. And I worked my way up, and I learned everything I needed to learn about entrepreneurship. I'm still learning more, but I learned a lot about entrepreneurship, and I spent 34 years since I made my first entrepreneurial dollar. I was 7 years old, and I'll be 42 this year. So, it's 34 years, almost 35 years since I got that first entrepreneurial dollar. I spent my life learning things and watching documentaries. I grew up around such terrible people. I was a high school dropout. I had a really rough childhood. And, when I was 17, I was in jail when I was 17 because I had a spat with another gentleman that, had intention to stab me with a knife. And I've been stabbed once before. I could show you a scar in person sometime. Maybe I should show that on Instagram someday. It's a weird IG post. But, anyway, I had been stabbed when I was a young man. And then this man's approached me with a knife, and we had a conflict. And I spent 90 days in jail when I was 17 and 18 years old, 1997. And starting in March of 1997, so that's about 24 years ago. And you know what I did, man, is I read a lot of books. I seen other people, they were playing cards, they were playing chess, they were playing a lot of checkers. Some of them were too stupid to play chess. I seen them playing dominoes, I seen them watching Jerry Springer. I seen grown men fighting while watching a sports game, punching each other about which team was gonna win, as if any of those athletes gave a shit about these 2 clowns.
Right.
So just, I saw so much absurdity, bro, that I'm like, man, I got to get away from these people. This is crazy. So I read a lot of books. I started reading biographies. And what I learned from those biographies while I was sitting there for those 90 days as a child, as a teenager, what I read from those biographies, what I learned is that, the people that have like the best outcomes, the people that are wealthy, the people that have the freedom, they have the money, they have the freedom, they have the nice things, they have the best women, they have the best everything. Those people tend to really value education. They want to learn things, and they tend to be hardworking, and they tend to be people of integrity. They tend to be people that keep their word, and a lot of them actually donate to charities and shit. Some of them are the most generous people in the world. So when they got so much abundance that they want to give back and help other people, and Warren Buffett's been a fantastic example of that, and Carnegie back in the day, and Rockefeller and many others. Rockefeller actually founded University of Chicago. Back in the 1800s, he donated the money that helped that school get off the ground. Back in the 1800s. So, anyway, I also I don't talk about it much, but I donated a lot of money to my school. I was the top donor while I was there. While I was still a student, I was the top donor there for 3 years. I helped. The school gave me something called the Dean's Prize for building the Chicago Booth brand because I contributed so much to help the reputation of the school. Very proud of that. So, that's when I think to myself of I was a teenager, supposed to be in high school. Instead, I was in a jail cell. And when I got out of there, then I was unloading trucks and stocking shelves at Walmart. All right. And then 11 years later, I had my first $1 million. 11 years later, I had my first $1 million. And I had 2 college degrees completed with highest honors. And I was on my way to the best graduate school for business in the whole world. And, that took me 11 years to get from, what I would call rock bottom in my life. But that was a decision period. That was a time for me to make an important decision. And I believe a lot of you are at one of those times right now that if you're still here right now, it's important for us to work together. It's important that, help you bypass those pitfalls and those problems, and help you get onward and upward onto learn better ways to enjoy brighter days. And for those that have that calling like I did, that mediocrity was unacceptable to me. Poverty was sure as hell unacceptable to me. And for the people that have that calling, they're like, man, I know if I knew better, I would do better. I'm willing to put in the work. I know that education is important. I know being around other high quality people is important. If you're that type of person, that you believe in yourself and you'd put in the work, I can help you a lot. Val says, what up, D? Where does analyzing initial public offerings come in terms of priority relative to the opportunities available to you and smart investors at this point in time? Thank you. Well, it depends on the context, man. It just there's nothing magical about an IPO. That's just a public company. That's a private company that's about to be listed as a public company. So I don't think of it as something magical. It's just that they're going to have less reliable financial statements in some ways, because it wasn't necessary for them to have, for when you're a private company, you do what you want. When you're a public company, you're going to have audited financials. So there's a strong case to be made that a company that's been publicly traded for a period of time is going to have, more reliable financial statements, and you're going to have more information about a company that's been publicly traded for a period of time. So when a company, that IPO, that initial public offering, when that comes up, then some of the financial statements are going to be, you're going to have less information. There might be some hype and hysteria about it in a good way or a bad way. So you just have to analyze those risks, like how much of this is probably hype, how much of this is probably true, and do I want to take that investment? Do I want to make that a trade or an investment relative to my other opportunities? So it's a good question, but my main answer is there's nothing mystical or magical. You're going to assess it the same way. You're just going to have less information because it hasn't been public information in the past.
And you want to be real careful about that, because there's a lot of because the stock market has been so hot. There's a lot of these companies that are becoming public right now, and their stock is getting kind of hyped up. We saw this, we've seen this before. So you just want to be real careful about what you jump into, and that's why you got to learn how to actually evaluate these things, in the market mastery course. You know what I'm saying? Because you don't want to make the mistake. A lot of IPOs. I saw some statistic that like 5 years later, the average IPO. You know what? I don't want to misquote this, but it's like you can make some mistakes when these things get caught up.
Well, yeah, a lot of them, just what you said, that they use these media campaigns to create a bunch of hype and hoopla, and then people get excited about it, and then a few people get excited and they drive up the price, and other people see that and they pile on, and then pretty soon reality happens and the thing crashes.
Right.
So that does happen frequently.
And there's some of them who they only went public. It was like the only way they could sell the company. Either the angel investors or the VCs, or that's the only way they can cash out. And then you just paid for the exit. It depends, right? So you want to be really careful about this.
No, that makes sense. That makes sense. Nicholas said, good point, Brandon.
Hey, man.
As one would expect, Mike A says, hey, Derek, I bought some distressed positions with good fundamentals. Then I bought more on margin. Then one appreciated a lot, so I bought more of the others on margin. Then they appreciated a lot. Now I have even more margin. Could repeating this pattern be a winning formula by letting stocks appreciate and then using margin to buy new distressed positions with good fundamentals as we go through sector rotation? Well, that's a very smart question, and it sounds great until the market someday sells off 10-15%.
Yeah.
So I like what you're saying, Mike, and the truth is I did exactly what you just described. I've been doing exactly what you just described. Bought distressed investments with good fundamentals. Then they go up. Then you buy. You have more margin. You buy some more. Repeat. I've been doing that all year, and it's worked out great. But I'll tell you what, it's like I don't use a ton of margin. I don't want to get carried away. I already have a lot of money. Let me say it this way, Mike. It's like, the difference for me to if I made, $30 million only $20 million in this recession, I don't want to risk blowing my account up and going to zero when I'm making a decision like, hey, am I going to make, 30 million or 20 million. It's like, it's better for me to be a little conservative and make 22 million instead of trying to go for 30, knowing that 0 is an outcome. So I don't need to make fucking $30 million in 2021. You know, if I made $20 million instead, if I made 22 million, that'd be great. So my logical brain says, bro, take the 20. If you didn't like this video, please feel free to unfollow. My clients and I celebrate when the wrong person leaves our lives. But if you did like this video, if you're a person that's dedicated to success, dedicated to a better life, make sure you like and subscribe. I have a lot more to share with you. I look forward to seeing you at one of my live events in the future or as a client on one of my paid mentoring programs.